All right, guys, back to work tonight. Wednesday's behind us. Time to get ready for Thursday. It's the 5th day of January, 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, boy, it's great to have you with me. My job tonight is to help us find the best trades, setting up for Thursday's trading session. I got a great video in store for you guys tonight. Charts are already in the background. Oil's here, Nasdaq's here, S&P's here. Glad to see you are here right along with me. Boy, where do I begin? Everything tumbling this afternoon. They must not have liked what came out of the FOMC meeting minutes here this afternoon. We talked about that in last night's newsletter. We got everything bearish, right? Big move down on the E-mini, big move down the Nasdaq, big move down on the crude oil. I'll tell you, plenty of great trades setting up on our radar for tomorrow. We've got obviously some short setups I'm tracking. Definitely anticipating some ranges tomorrow. Anytime we see a big move like this in one day, the following day tends to go sideways. So we'll talk about how to adapt to a range-bound market tomorrow. And maybe could this thing reverse? Could this be a V bottom and a reversal tomorrow? Could be. I'll talk about how to qualify the reversal, how you know what the reversal will look like, and when it's a reversal and when it's just a deep pullback. So we're going to cover all the details. We'll go over all my favorite trades in tonight's video. Before we jump in, though, don't forget to subscribe to our YouTube channel. I publish this video every evening. I don't want you to miss tomorrow night's video, so make sure you subscribe. Hit that little bell icon because a lot of this stuff is very time sensitive. And don't forget, if you guys have any questions for me, drop those questions in the comments section. I would love to answer any questions you might have along the way. And as always, I appreciate you guys tuning in tonight. If you enjoy this video as much as I enjoy making it, hit that like button, hit that thumbs up for me on this YouTube video. Really appreciate you guys carving out some time on this Wednesday evening. But enough of the intro, though. Time is ticking. Let's get ready for Thursday's trading session. Now, unless you've been living under a rock this afternoon, and unless you haven't opened your charts yet, you might have missed this big drop, but everything is very, very bearish. Now, of course, whenever we have these big moves down like this, there are four different types of pullbacks. Four different types of pullbacks, right? We want to sell pullbacks. We want to sell retracements, right? We want to sell it as it bounces, sell it as it bounces, sell it. You have to think everybody wants to get that next bounce off the low and sell up into that area of resistance. Selling the bounce or selling the retracement off this low, that's the easy part. The hard part is understanding how to read the price action so you can time your entries like a professional, right? So we've got four different types of pullbacks tonight. We're going to go over all four of those. And again, as I mentioned in the introduction, we're going to talk about how to anticipate and trade a range and how to know the difference between a reversal and a pullback. So we'll cover all those details tonight. Now, today's Wednesday, right? So tomorrow is Thursday. Let's make sure, before we jump into the charts specifically here tonight, we're going to go over all the details in this video. Why don't we just make sure we check the news schedule for tomorrow? There really isn't a lot of big news tomorrow. Yeah, the international trade, jobless claims, I doubt you're going to see much of a reaction to that. If I had to guess tomorrow, I would guess that ISM services index, right? We saw the ISM manufacturing index on Tuesday really shake things up. That services index, definitely not as potent as the manufacturing index, right? But the services index does tend to have some punch to it. And of course, you know me, if you're with me in the trade room each day, I love that 10 o'clock to 11 o'clock block in our trade room. So if I had to guess tomorrow, I would guess that 10 o'clock to 11 o'clock block. And of course, right, the rest of the day, I would imagine that will be the best time to be at your desk tomorrow around that 10 o'clock ISM services index. One thing you want to keep in mind for tomorrow afternoon as well is that we're going into non-farm Friday on Friday, January the 7th. What that means to us as day traders is oftentimes the end of the day on that Thursday afternoon tends to be a little bit unpredictable. And the reason for that is because all the big money in the market, all the whales, right, all the market makers, whatever you want to call them, the people that actually move these markets around, they are going to be, well, they'll be balancing portfolios ahead of that employment number on Friday. They'll be hedging their portfolios ahead of that employment number on Friday. So you got to remember, all the big players are going to be starting to manipulate their positions as they take protection ahead of what really could be a pretty surprising jobs report on Friday. So, my whole goal on a Thursday before non-farm Friday, make that money early as you can. Be aware, once we go into like 2:45, 3 o'clock, 3:30, you'll tend to start seeing the market acting a bit funky just because they're trying to get ready for that employment number on Friday. And of course, don't forget tomorrow, right? We're going to get our day started bright and early tomorrow morning, 8 o'clock Eastern time in our trade room. I would love to have you there trading right along with me. And then, of course, come back tomorrow night and we'll talk about how to trade that non-farm payroll, because non-farm Friday, it can be a little tricky. So you want to make sure you come back and see me in tomorrow night's video. Let's get back to this video, though. Let's get back to getting ready for Thursday's trading session. Everything's bearish, right? You don't need me to tell you that right now. We've got strong moves down. They must not have liked what came out of that FOMC meeting minutes. Anyways, let's go through each one of these. Let's talk about my favorite trades. There are going to be some overlaps in this. I'm going to warn you right now because they're pretty much all bearish right now. But, each of these markets is a slight different twist on what we're going to be looking at here for tomorrow. Now, of course, over on the S&P, first things first, we kind of stumbled around right inside that range. We kind of talked about how that big range from earlier on this week might be a little bit of a pain in the butt there. It definitely was, and of course the market eventually tumbles and runs lower. Really, kind of two things. Whenever I look at a chart like this and I see such a big move, right? This is an 8,000 tick chart tonight, right? I was on a 5,000 tick chart yesterday, which means, and the reason why I go to a slower time frame is because I try to kind of quiet down a lot of the noise that comes with a tick chart when you get these big moves, right? So that's an 8,000 tick chart, and look at how big that move is. It's a huge move, and anytime we see a really big move today, we oftentimes get a range-bound market the following day. So again, like I said earlier, we are anticipating potentially a bit of a range going sideways tomorrow, and we'll talk about that in a second. The second thing that comes to mind is, look, there really hasn't been any decent bounce right now, so you have to think a lot of sellers who are waiting for traps or deep pullbacks here, they're still waiting. And so you have to assume that the first bounce off, remember the first test is the best test, you have to assume the first kind of pullback off this low is really going to be very desirable for those sellers, right? So strong move down, big move. We're expecting a range tomorrow, but I'd like to get this thing up and sell it back down here. I will be anticipating a sideways range. And I'll tell you one thing, the S&P is a lot more dramatic than the Nasdaq and the oil. You'll see why I say that in a second. But look at all this open space. I mean, look at this, right? It keeps going. There's so much open space down here because of that big Santa Claus rally that we saw into the end of the year. This thing could keep on really grinding lower here. So I do want to make sure we're ready for it if it does go lower. So we talked about in the introduction 4 different types of pullbacks. I'm going to go over a couple of them here. I'll go over a couple of them on the Nasdaq, and we'll go over a couple of them right on the crude oil as well. Pretty much all of these, though, can be applied to really all 3 of these markets, right? So I want to sell a pullback right now. Now, one of my favorite kind of techniques for selling a pullback here is a shallow pullback trap. So, first one out of 4 different pullbacks is a shallow pullback trap. So I've got this range marked up, right? We talked about a breakout pullback last night on oil. Remember last time we talked about that bullish breakout pullback? Same thing here, right? We go down, pull back. I would anticipate that type of shallow pullback is definitely on our radar. I would also expect, right, to get that pullback up towards the high of that channel. 2 out of the 4 pullbacks I'm watching for tomorrow. One would be what I call a shallow pullback trap. Now, what you want to do is you want to get just above the moving average, and The reason why you want to trap on this is because you want to avoid selling too low, right? Ideally, I want to get up around this area up here. That's kind of the ideal area to sell short. But again, with all of this momentum, we may not get that pullback. We may not get much more than a pullback back to this 47.10, half area. So if all we get is a really shallow pullback, what you want to think about is we'll oftentimes pull up above the moving average. Buyers will come in, they'll bounce a little bit, they'll slip below it, don't chase it lower, wait for that little trap, right? So the first pullback is that shallow pullback trap. Look for that nice strong signal candle closing below the moving average. And then where would my targets be? This is a pretty easy one. The first target will be right back to retest the low. And then what I like to do is I like to take the size of the pullback and project that down to give my second target. Right? Kind of an easy trick there to finding, again, first target, back to retest that low. Second target, just simply take the amount of that pullback and double it down. It's very, very easy way to grab a next target. And again, because we have all of this wide open space down here, I would definitely try to leave a runner if you can get this thing to really start pushing there. That's one of them. Here's a second one. As we pull back, let's say we go up right into the top of this channel. This is what we're really hoping for. We're hoping we can get this nice bounce up off the low, get above the moving average. Now, once we start running into levels of resistance, we're hoping is these buyers are going to come in. And guys, buyers have been getting off easy the last couple of years, right? They buy every single dip and it just keeps on going right back up. Well, hopefully those buyers buy the dip here as well, because once they commit off the moving average, where are all their stops? They're sitting right below that low. All of this momentum says it's very likely we end up back at those lows at some point tomorrow. Wait for what I call a buyer failure pattern, selling right now into those stop losses. And then don't forget, grab that first pullback. Oftentimes it's right off that same spot, right? Right off that same spot. That's a failure into a pullback combination. That will be our second type of pullback that I like to use. This is one that I really hope that we get. Now, I got two more pullbacks. I'm going to talk about them a little bit later on in the video because there's a couple that I want to make you aware of that are a little more advanced, right? So we're kind of warming up on the easy ones right now. We'll talk about two more types of pullbacks here as we go deeper into this video. How do we trade reversal, right? What would a reversal look like? Well, I am definitely not in the business of trying to pick a bottom in a market like this. This is definitely not one of those markets you want to start buying down here. Unless, of course, you've got a huge amount of capital and you can simply start buying as it goes. Eventually it will pop back up, right? But you better have some deep pockets and some good sleeping pills, because it's tough to sleep at night when you're deep in the red on a bad position like that. Anyways, long story short, what would qualify this pullback as a reversal? Now, there are three different types of reversals, okay? Well, and I know we're a bit complicated with that, right? But I'll go over one of them here right now, and we'll cover more of those reversal patterns as we go later on in this video. The most common and the most reliable reversal pattern is called a 1, 2, 3 reversal. Let's say we do pop up. Right now, the buyers come in, they try to buy that pullback, and now they jump off the moving average, okay? That's what we call a 1, 2, 3 reversal pattern. Now remember, guys, it doesn't matter how strong that first leg is. That is irrelevant. What we have to do is we want to see this market jump and start to accelerate off the moving average. Once you start seeing this thing start to accelerate off the moving average, it's called a short squeeze, right? It's called a short covering rally. Sellers have given up on it, buyers take control, and we can now go looking for that new channel. Trending markets love to use channels, and once we start seeing this market begin to rip higher here, again, we're not trying to pick a bottom. But once those buyers here, once they can hold this thing and start to get that run, now we take action. Now we mark up the high, we mark up that low. And one of my favorite entries is to look for a prior swing. This will usually be just below the moving average, and we can use what we call a trap or a failure into a pullback combination. There's a lot of different types of price action entries, traps, seller failures, below the moving average, and of course that first pullback. Now guys, I can't go into a lot of detail on the specific rules I use to qualify all the entries, which ones to take, which ones not to take, the trade management, the time frames to use. I can't go over all those details here tonight, but if you want a deeper dive into all the entry patterns, how to use them, when to use them, I cover all that stuff along with a nice big checklist for you to do it on your own. I cover it all in our quick start class. We get a great free trading course on our website. If you're serious about your trading, if you're committed to success, like I know a lot of you guys are, make sure you grab that quick start course on the website, and I'll put the link up there in the upper right hand corner. That way you can get a deeper dive, right, if you want to. Now, what happens if we go sideways? What's probably going to happen here at some point tomorrow is we're probably going to either see this thing go sideways overnight and then get the bounce back up, right? Or we may see it just simply bounce up here overnight, come back down, and then start to go into a sideways range, right? We don't really know what we're going to get just yet. What we do know, though, is once we see that range start to develop, what's the game plan? What's the game plan when we see a trading range? Well, we're bearish right now. And so if we're bearish into a range, our job is really quite similar. We're going to look for levels of resistance above the range. The range, remember, acts as a magnet, right? Ranges act like magnets. And there are, for the most part, there are two ways I like to trade a bear market into a trading range. One of them is I want to wait for that pop. Wait for that buyer failure and sell it back down again. Then I look for that follow-up trade by finding a new channel, and repeat after me, the first test is always the best test, right? These are how I like to trade these range-bound markets, right? So imagine now we pop up, right? Go up into those areas of resistance, right? The buyers come in, they try to get long. Where are their stops? Remember, all that momentum, right? All that momentum. Range is a magnet. Where are the buyers going to get in trouble right there? Yeah, that's where their exits are. They're right below there, right below the low, right? So once we see that nice strong signal candle, and again, you'll learn more about that in our video class I mentioned earlier, right? I now have that buyer failure. And then remember, the amount we go above the range is oftentimes equal to the amount we go below the range. That's where your next objective is. Find that new channel, and you want to grab that first pullback off the high, right? It's a buyer failure into and really when we go looking at that entry off the low of that channel, remember this is an 8,000 tick chart. We're going to trade a much faster time frame tomorrow in the trade room, right? That entry off of that low could be a bull trap. It could be a buyer failure. It could be a pullback setup into a strength move. You'll learn all the details in that quick start class. So again, this is two ways, right? Either selling the failure or trading the turn, right? The turn as we go right back down in. And then last but not least, what if we keep going lower here, right? What if we keep going lower? If we keep going lower, what's likely is the market will start to kind of, grind lower here. If that happens, if we start getting this market grinding lower, that will usually end up telling us we have a spike in channel. If it grinds lower like this, I'm going to have to get a lot more aggressive on this. This big channel is no longer going to be useful. What I'll do is I'll tighten this thing down. I'm going to look for traps above those highs, right? Above prior swings. The bottom line is again, that eventually this thing will pop back up, and that's where we can make the easy, 3x, 4x, 10x on that trade, right? Risk small for that big reward back down in. I'm not in the business of trying to chase this thing as it goes lower. I'll wait to get some good meat on the bone with that pop up, trap, buyer failure, right? Pullback combination, and back down we go from there, right? Trap above a prior swing, right? Buyers try and fail into that first pullback, right? Combination. So again, as we go lower, kind of grinding lower here, tighten up that channel, wait to get above the top of the channel, usually above the moving average, let those buyers try and fail, and keep on selling it back down. And again, as I mentioned earlier, target back at the low, measure the size of the pullback, and that'll give you an easy, goal of where the next target is going to be from there. All right, so S&P kind of kicking us off here tonight. We've covered a couple of the different ways to trade these markets. I got some more though. Let's keep going here. Let's grab a look at the Nasdaq. The Nasdaq is obviously very, very similar here, right, to the S&P 500. The one, I think, big difference on the Nasdaq is the Nasdaq doesn't have really kind of unlimited space to run, right? There's a big support zone right below us. In fact, you can see we're sitting on that 15,742 area, which is really a big time level of support. So we don't have that kind of wide open space like we do here on the S&P. You'll notice as we go lower, right, I'm kind of adjusting that channel down. So I've got, again, same basic idea, right? We have a huge move today, which means at some point tomorrow, we're probably going to start going sideways into a range to allow this market to kind of catch its breath, right? If you ran a marathon this afternoon, like these markets did, right, the next day, you're probably going to kick your feet up on the desk and relax a little bit, right? So that's kind of what's going on here right now. Let's take this channel out here now. Let's adjust this thing down a little bit. Yeah, we'll start looking for a steeper channel here as it goes. There you go. Just like that, right? Kind of run those channels down as it starts to keep rolling lower. Okay, we know we're going to probably see sellers waiting for the next bounce. Right? I'd like to get us up around these areas, right? That would really be, I think the best possible short tomorrow will be up around that 1600. So we might get a pretty significant bounce off here. Obviously, we'll take whatever we get. Now, we talked about on the S&P, right? We talked about that shallow pullback trap, right? We talked about that, modest pullback failure into pullback combination. Let's talk about two more types of pullbacks here right now. We've covered two of them on the S&P. Let's cover two more here now on the Nasdaq. Same idea, right? Find levels of resistance, sell off the high of that channel. We have this what I call open loop down here, right? Big strong move. There's a big bullseye right back on that low here. So we've talked about two of them. What's one more? Here's one more. Let's say, for example, the market really spikes back up here overnight. Now, again, we have a very big move down, and it will likely end up coming right back down there again. But what's the difference, though, now? This is a really strong pullback. Whenever the market makes a really strong pullback, what that does is it really gives, in this case, the buyers, a bunch of opportunity. You're going to see a lot. Remember, we mentioned this earlier, right? The buyers have been spoiled being able to buy every single big move down for quite a while now, right? So what's going to probably happen is if this thing starts to, profit taking, short covering rally, short squeeze, if it starts to really pop off that low, remember the buyers have to hold that pullback in order for this to be a reversal. Okay, remember what I said earlier, it does not matter how strong the initial leg is. Okay, don't let that fool you. However, we do need to anticipate these buyers are going to bring some serious ammunition when it pulls back that deep. So in these situations, what we want to do is you want to look for the two try rule. This is the same pattern we talked about on Monday night to call that big reversal off the high earlier this week. What you want to do is you want to give those buyers the benefit of the doubt. Let them try once, let them try twice. One of my favorite ways to take these types of trades is to grab a trap, that trap entry, right, off the high. And again, you'll learn all about traps in that free trading class. One of my favorite entry setups, requires no indicators, very easy to learn, and boy are they reliable. So again, that's when to do it. I also like to look for a hidden channel. Draw it off that low, up around that high, right? Remember, you always want to sell at resistance if possible, right? So that's why I like to use those hidden channels, right? So nice big strong signal coming off that high and get that short going back down again. Now, these types of two try failures they oftentimes will collapse back down. And when they collapse back down, you don't want to chase them because you don't want to sell low. So what you want to do is you want to look for, again, look for that two-try failure off the high, and then go out, find a new channel. And these deep pullbacks, they almost always will give you that little cherry on top with another one of those, again, first test. Now, I always like the trap entry, right? Maybe it's a bullish, buyer failure. Maybe it's straight up pullback pattern, right? You'll see examples of that in that free quick start class. But those are two of my favorite ways to trade, or two entries I can use as we, of course, right, bounce up off of that low. Now, that's the third, right? That's the third pullback. There's one more pullback we can use here, and this is the one that you almost hope you get tomorrow, really, right? So here's what it's going to look like. This one's going to go up now, and what will happen is you're going to see the sellers come in, and of course, like I said earlier, you want a trap entry there because you're so low. Imagine now the buyers take it higher. Okay, now remember, this is very, very important. For this to be a reversal, we have to get above the moving average and hold the pullback. Okay, remember that? 1, 2, 3, reversal. Okay, now imagine now the bears come in and they try to take it lower, right? And then they go higher. This is not a reversal yet. Okay, make sure you see that very small difference, right? Now, when that happens, there's going to be a trend line coming up underneath. Okay, we call these two-legged pullbacks. You're exactly right. What you want to do is you want to try to get underneath the trend line and use that trend line to your advantage, right? That's a really great trade. And honestly, that could really get us up inside some of these areas up here, right? I think that might be some of the easiest money that we could make tomorrow. And then, of course, as the market comes back down, if I can get it, that's exactly where we start looking for that new channel and that first test, right? That first test off of that channel. Where's my target? Yeah, target's pretty easy, right? Target's back up at that or back down at that low. And then if you got an extra contract left over, definitely leave that runner down into that support zone, right? Waiting down below. Does that make sense, right? Right? So that's the fourth type of pullback. Are these making sense? If you're enjoying the video so far, hit that like button for me. I hope you subscribe to the channel because I got a lot more good stuff to share with you guys, right, regarding my price action strategy. I do look at charts a little bit different than most people. So that'd be the fourth one here, right, for that pullback. And then again, don't forget, if we do get up, if the buyers can hold this and jump 1, 2, 3 reversal, mark up that new channel, drill down to your faster time frame, and find one of the entries that we talk about in our quick start class, right? Now, how about another one, right? Here's another type of reversal that we might be able to use here. This one is called a two-try reversal. Now, these are pretty common when you get these kind of, V-bottom reversals, right? So let's say, for example, that the market punches up, and this probably isn't that likely, but we'll see what happens tomorrow. My job is not to predict. My job is to trade whatever we get. Let's say, for example, now the market goes up and really starts to kind of spike, right? Short squeeze, the bears are getting run over, the buyers are taking it, maybe something happens overnight, right? Everybody's buying it, right, as it goes higher. When that happens now, what you want to look for is that two-try trap. And this is one of those trades where you're going to stay patient for it because you're going to watch this thing, right, just take off to the upside. And it's very tempting to want to chase after it. Okay, what you want to do, though, is wait for that really strong move higher. And I know it's tough to miss that big bounce, but, welcome to trading. Trading's a lot like surfing, right? You're not going to catch every single wave. You're not going to get the entire wave. Your job is to find a little chunk of them a couple times every day. It's plenty of money to make, right, with leverage in the futures markets, right? So if this thing really starts to accelerate, really starts to rip higher, find that strong move up, that shallow pullback, right? That drives the buyers crazy. The higher high in price confirms, right? And then, of course, that trap entry as we go, right? That's another one of my favorite kind of reversal patterns there if the market really starts to rip higher. Now, where do we think the buyers want to go? Yeah, the buyers have a pretty easy objective, right? They want to get right back to pretty much where we came from. There's that big range there, right? That big range overhead around that 16,200 area. So watch and see if we get that here for tomorrow. Same thing, of course, right? Same thing applies here if we go sideways. If the market ends up going sideways here for us, right? Either overnight or maybe we bounce up and then back down again. Just remember the game plan, right? For a bear market into a range, right? Wait for the pop up at areas of resistance. That's the most important thing about it, right? Find those levels of resistance up overhead. Let those buyers try and fail. And then again, mark up your amount above, mark up the amount below. I can short the failure. I can short the first test because, of course, the first test is always the best test, right? So it is that buyer failure. And again, I don't know what the entry will look like off the high of that new channel. I'll be looking for my bull traps, my buyer failures, my pullback combinations, and we'll talk more about that tomorrow morning in our trade room. If the market keeps on grinding, right, keeps on grinding, just wait for that bounce, right? And then deploy one of those four types of pullbacks: shallow pullback trap, modest pullback failure, deep pullback, two-try failure, or maybe a two-legged pullback, right? Hopefully that all makes sense there. If not, drop me a comment in the comment section. Drop me some questions down at the bottom of the video, and I'll be happy to go over to more detail here in the comment section below. Again, get a bunch of support down here, right, for those bears tomorrow, right? So don't chase it. Wait for that bounce, and we'll see what we get here. How about some oil? Let's go back to the oil chart here. A 1500 tick chart here now on the oil, just as we had anticipated in last night's newsletter, right? We got that beautiful breakout pullback going higher here today. If you watched last night's newsletter, you were locked and loaded for that here today. It looks like the oil, though, got dragged down right along with everything else right now. We basically had that bull run up, had that oil report at 10:30 Eastern time this morning, and of course the market then takes off and makes a strong run down. This is definitely not as dramatic as the S&P and the Nasdaq, which means we're not as likely to see a range tomorrow, but we definitely will have to anticipate a possible range, where we always want to keep our eyes open for a possible range-bound market tomorrow, one of my favorite types of markets. We do, though, just like the S&P and the Nasdaq, we do have a very strong move going lower. And of course, anytime we see a real strong move in one direction, we know the odds are very good that sellers are going to be stalking those levels of resistance, and they're going to want to sell this thing right back down again, right? Because that's where you can risk 20 ticks on a short and make 100 ticks, right? That's where you can get those 5x, 4x, 5x trades here, waiting for those nice deep pullbacks. So, without sounding like a broken record, a lot of this is going to be similar here, right? As we talked about on the S&P and the Nasdaq, as we go lower, you have to think this big range down here. This is a juicy. I mean, look at the size of this range down there. Just a huge range down in that, 76, 45, 76 even area. Big range. Ranges, of course, act like magnets. And if the bears get what they really want tomorrow, Friday's close. Remember, anytime you see that kind of gap between Friday's close and Sunday's open, we talked about this on Monday, that has to be a big, juicy target, right? So range magnet, Friday's close seems to be a very easy target. And of course, 75, big round number. Now, the buyers, you can see when I'm zooming out at this, the buyers definitely have. I mean, look at this, right? This could potentially make that run right back up and retest those highs. It's possible, right? So we definitely be ready for that tomorrow. But of course, anytime we see this much strength in one direction, you got to be a little bit weary at trying to be a buyer here until we can see that reversal. All right, we're looking pretty good. So how do we buy it? How do we sell it? What if it goes up? What if it goes down? Again, we've talked about those four different types of pullbacks right now. I've got my shallow pullback for my trap. That will definitely be something on my radar. Again, whenever you have a lot of strength like that, you just might not get, we may not get all the way back to that area. You can be prepared for that, right? So, we don't know though if it'll keep going here, right? So that's why we have to wait for the proper entry signal. My crystal ball doesn't work as well these days, right? It's getting old. So I don't try to predict it. I simply wait for evidence. Shallow pullback trap up above it. Now I like this trend line right there, right? It's almost like an expanding triangle. And we can use that level here. Boy, it's a great spot. It really is a great spot there for us. Get me above the moving average. Get those buyers to commit trying to go higher. When those buyers commit, all of their pain points, right? Their pain is right there. They're going to wave the white flag when they get that strong candle down. It's an easy way to find a one-to-one back to retest that low. Failure into pullback combination, right? Failure into pullback combo, get that buyer failure, get that first pullback. And then again, on these shallow pullbacks, right? Target goes at that low, measure the amount above, right? Or measure the amount we bounced off it, project that amount down. It's a really easy way to find another target for you as you go. And again, you got that big range, right? Waiting there before us. Let's say we get the good stuff though. Let's say we go all the way back up into this, 77, 80, 78 area. Let's say we really bounce off this low right now. Now what do? Now we give the buyers the benefit of the doubt, right? We let the buyers try once, we let them try twice. Do we get a trap? We can only be so lucky, right? We'll trap off that high. That's one way to do it, right? Trap high off that. Do we see a hidden channel? That always works, right? That's always an option, I should say. So we're looking for, right, that either hidden channel or a trap entry. What we know, though, is once those buyers try a couple times and they get that fat, juicy red signal candle closing back below the moving average, they're bailing on that position. The market runs lower. Now, remember, whenever you get those really deep pullbacks, look for that trap. Because what happens is once the buyers get stopped out, the market oftentimes collapses right back down. That's why I like to use failures so much in our trade room. When we collapse back down now, we don't want to sell low, right? Don't chase it going lower. Wait for that trap, right? Wait for that trap. And again, if you can grab that new channel, man, oh man, I love these combinations, right? So a 2-try failure into that first channel test, back down to retest a low, and definitely leave a runner with all those big magnets waiting down, right? Waiting down below us. A two-legged pullback, again, will bounce ahead of the moving average. Draw that trend line, get underneath, up and over, right? Nice strong signal there. Closing below the EMA, you'll learn all the entry signals as part of that free trading class. Again, nice easy short off the high there. How do we reverse this thing? So the reversal is going to be the more difficult part of this, right? I would imagine that reversal will be the more difficult part because there isn't a lot of open space up here, right? Now we've talked about the 1, 2, 3 reversal. Right? We talked about that one. 1, 2, 3 reversal, right? So mark up that high, mark up that low. As you can see, though, this is going to be tight, right? It can be tight. As long as I can get that nice, strong jump off the moving average and I can get into something here ahead of those, 78, 38 highs there, right? That's going to be a decent entry as we go back up to retest the high. If the market really starts to race, right, and rip higher here, strong move up, shallow pullback, higher high in price, strong move up, shallow pullback, doesn't allow the buyers to get in, higher high in price, confirms the move. That trap entry will be a decent opportunity as well. And I think another one that is worth watching here as well would be that kind of, it's almost like a breakout pullback. Watch this, right? This trend line right here, right? This whole area right here. So now imagine now we pop up, right? We pop up. We get back below that moving average, big strong run going higher. There's a bullseye now right back at that high, trapping those bears, failure, pullback combo, and right up. Now this one will require a very strong move up, right? It'll really have to spike on the way higher. Again, think about this trend line right there. Think about these swing lines right there, right? Get back below the moving average, trapping those bears with a seller failure, grab that pullback combo, and we're hunting for a retest of that high here. So a couple different options there. Just be careful though. This is not going to be the easiest place to get long here. We're going to see some proof of momentum turning. And remember, it's not enough to get a strong bounce, right, up in this area here. That is more likely going to come right back down again, right, to retest that low here. If we do see a range down here, nothing changes, right? Nothing changes. Get that bounce, get that failure, mark up the amount above, mark up the amount below. We're going to grab that failure pattern. We're going to grab that first channel test and try to finish off that pendulum swing, right? Buyer failure, trap pattern, bull failure off the highs there, etc., etc. If we do keep on grinding lower here, right? We keep on grinding lower. There's not much more I can do to kind of shape up this channel. What I will do though is I'll keep on drawing that channel down, keep it up around those highs, keep focused on selling that first pullback, get back above the moving average, up around the high of that channel, trap setup, failure, pullback combo. And again, the amount we go up is oftentimes equal now to the amount we go right back down. That'll be an easy target for you as we try to finish off this move back down into that range magnet. Again, keep an eye out for a range. Remember, ranges are pretty good clues for tomorrow. Sell that bounce. You've got 4 different types of pullbacks we've talked about here today. We've talked about 3 different types of reversals. I know I covered a lot in this video here tonight, but keep in mind, tomorrow morning, every morning, 8 o'clock Eastern time, we open the trade room up. I would love to have you there trading this stuff right along with me. I provide all the software templates, all the indicators, all the cheat sheets and checklists to make sure you can follow right along and do this the right way the first time around. If you guys have any questions, don't be afraid to call the office. I would love to help out with any questions about your trading. If you want to join that free trading course or any of our membership packages, I'll put all of the membership links in the description of this YouTube video. Don't be afraid to drop me a question in the comments section. I would love to answer any questions that you might have. And hopefully, I'll see you tomorrow morning, 8 o'clock Eastern time in our trade room. If not, we'll see you guys back here tomorrow night and we'll get us prepped up for non-farm Friday, right? So careful out there tomorrow. Don't chase this thing going lower. Don't get short without the proper signal. And we'll see you guys on the next video. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.